Hello, this is Steve Sanangelo from the SRS Rock Report, and today I've got a very important update. Gold versus Bitcoin. What the market doesn't want you to know, or what the market doesn't really understand about the fundamentals between gold and Bitcoin, because it's really not spoken about. Now, before I get into this, I run the SRS Rock Report website. I talk a lot about these things in detail for subscribers. You're more than welcome to come check it out. But there's a lot of details about the metals, the miners, energy, asset values going forward. And I talk about this in detail to subscribers. So you can check it out at the SRS Rock Report. And one of my recent reports was Critical Insight Report about the precious metal industry, breaking the silence on an industry that unfortunately takes advantage of the client. This is very important for people to understand, especially if they're acquiring precious metals. Now, let's get to Bitcoin. Now, the majority of the analysis about Bitcoin is the price. That's basically what it is. And one of the big proponents of Bitcoin is Max Keiser. Now, this is interesting because some years ago, Max was a big gold and silver supporter. Talked about the silver take down JP Morgan, but then he's given up on the precious metals and he got into Bitcoin only. And so we could see going back to 2021, he was talking about it's going to hit 200,000. It didn't. He said, well, it's going to do that. It's still in play for 2022. It did not do that. And so, and then even in 23, 220,000 is in play. And so this is what the market is looking for. We're waiting for the next big double in Bitcoin. And we see Robert Kiyosaki was talking about 350,000 Bitcoin. It didn't get there. But now, more recently, Max is talking about 500,000 Bitcoin. And he retweeted this where it says 1 million Bitcoin is coming. So this is what we basically see about Bitcoin is the price. But there's an important fundamental that backstops the entire Bitcoin market, and that's the Bitcoin mining industry. And that's what I'm going to share with you. Because this is an older chart I put together to explain lifespans of different forms of currency. And it goes from strong, durable to weak, fragile. And it all comes down to how long these currencies last. Because if a gold coin, if you use it in circulation, it'll last 35 years. But basically, the surface gets worn off. You do lose a little bit of the gold coin, but the mint takes the gold back and then can remint it, and it'll last another 35 years. Now, Federal Reserve notes are dollars. The $1 bill, on average, when you add the 1, the 5, 10, 20, 100, they last about 8 years. Now, the digital banking service, now we do a lot of banking on the banking service, they last about 4 years. And I said the issue with Bitcoin, the miners only last 2 years. And I got a lot of flack for saying that, but it turns out to be pretty true. Because Paul Butler, he gets credit for this, the problem with Bitcoin miners. He says Bitcoin miners burn an enormous amount of capital just to capture the same slice of a diminishing pie, but they take advantage of investor confusion over how mining works to frame it as investing in growth. I could do a half dozen video reports just on this. But basically, to sum it all up, what Paul Butler shows is that a lot of the depreciation, or they say how long a Bitcoin miner will last you, the ASICs, it's about 5 years. But what he found out when he looked at a lot of depreciation curves for Bitcoin mining equipment, the red is the actual depreciation. Now, we know this is true because when you go to Riot Platforms, one of the larger Bitcoin miners, they show it right here. Miners and mining equipment, 2 years. Now, this was in their annual report for 2023. They've updated it now. They've decided they're going to move their their lifespan for a Bitcoin miner to 3 years. But that's more of an accounting thing. But if you look at Paul's Bitcoin mining average depreciation by the second year, we're talking 90% of the Bitcoin that's going to be produced typically will happen in the first 2 years. And then you get maybe another 10% in the third year. And then the mining equipment is obsolete. You've got to get new mining equipment. This is massive capital destruction that is really not understood by the Bitcoin industry or the investors. And we can see this. They show it right here on their balance sheet. This is Riot Platforms second quarter. They show what their total revenues would have been if they sold their Bitcoin. Now, they're not selling their Bitcoin, they're holding on to their Bitcoin, but this is what they would receive. So look at the depreciation and amortization. These are in thousands. So 37 million, and you divide it into 70 million revenue, that's a 53% depreciation. So basically, we could see how high the depreciation is. And all depreciation means it's an accounting on how equipment is breaking down. And that's what it basically shows. And if we look at Marathon, who's one of the larger Bitcoin miners in the United States, it had 87 million in depreciation on 145 million in revenues. That's 60% depreciation. Now, it may not be as high in the next quarter, but still 50% depreciation. This shows how quickly these Bitcoin miners are burning up, and the market doesn't really understand that. Now, let's compare that to gold miners, because I'm going to show you the difference here. This is Newmont. This is the largest gold miner in the world, and it had 4.4 billion in revenues in the second quarter of 2024. This was the depreciation, 602 million. That's 14%. And the gold price is higher, so the revenues are higher. But typically, we could see the depreciation for the miners is about 18%. So that's what it is for Newmont. And Barrick had 480 million in depreciation on their 3.1 billion in revenues. That's 15%. So you see the difference here already. The fundamentals for producing gold, or producing Bitcoin for that matter, it's massive capital destruction in the Bitcoin mining industry, and the market really doesn't understand that. I'm trying to educate people. So if we look at the gold price, this is a monthly chart of the gold price. This is my new total cost for the gold miners, about $1,900. And this is the gold price is $2,524. That's a $625 profit per ounce. The gold miners are making money. The market wants gold. There's a 33% profit margin. It's a very sustainable business model. And I have shown in charts that over the last 50 years, the gold price has been bouncing off the cost of production. And so when we compare it to the Bitcoin miners, this is the Bitcoin chart right here. Right now it's at 54,200 or something. Well, the direct cost, and I'm going to show you the direct mining cost, it's about 74,000. So the Bitcoin miners on their direct costs are losing 20,000 per Bitcoin. That's a 27% loss per Bitcoin compared to the gold miners. Now, this information comes from Macro Micro, and they basically show their calculation using what the Bitcoin average mining costs are, which is 74,000 based on the Bitcoin price. But you see, this doesn't really show all the costs like I do with the gold miners, because this is what's very troubling. The Bitcoin mining revenue since the last halving in April, which is right here, we can see the waterfall. This is the first time in history that Bitcoin mining revenue has collapsed. We've got the black line, which is the Bitcoin price, and you can see the price right here. Now, this is the 7-day average. And then the red area is the Bitcoin mining revenue. Well, you've noticed that it's been pretty close to the Bitcoin price, the trend line, until the halving, and it has totally collapsed, which makes the Bitcoin mining industry very unprofitable and very unsustainable. Now, if we look at the longer chart, this chart's a little bit over, it's maybe a month or so old. You could see the big gap here. Look at this big gap. It has never been there before. Matter of fact, when you go back to 2016, 17, 18, and 20, the mining revenue was well above the Bitcoin price trend line. This is the first time in history that Bitcoin miners are really struggling to be profitable, and they're not profitable. But it's even worse than that. If we look at Riot Platforms, this is their second quarter, 2024. I'm going to show you the real cost. This is the real cost. Now, this is their revenues. This is their direct cost here, engineering and other. But we've got selling, general, and administrative, and the depreciation and amortization. You have to write that off because these Bitcoin miners they're getting used up, and you've got to spend more money to replace them. So it's a real cost. So if you add up, and then right here, they got power curtailment credits. And so we want to subtract that. I am not going to talk about Bitcoin fair value. I'm just looking at the mining for each quarter. That's how you get your real cost. So the real cost this is in thousands. So it's 138.2 million. You divide it by the 845 Bitcoins that Riot Platforms produced in the second quarter of 2024, it's a stunning $163,620 per Bitcoin. If you include all the costs, and you have to pay for these costs, these are real costs. But I'll tell you what's interesting. These companies are paying the stock-based compensation handsomely to management and employees. And I think Bitcoin mining investors should be really upset about this, because just in the second quarter, they paid 32.1 million in stock-based compensation. And if you go back here, Riot lost a lot of money. They didn't have the money to do that. So they issued shares. They issued a lot of shares to pay for all this and to pay for very nice, handsome stock-based compensation. Now, let's say, to be fair, I take the stock-based compensation and I remove it because it's in selling, general, and administrative costs. We subtract it for this, and that's the new number, 29,054. It would be 106.1 million. If we get rid of the stock-based compensation. They still have other selling, general, administration costs. It still turns out to be $125,590 to produce the Bitcoin. It's very expensive to do this. And so when we average Marathon, and Marathon's doing the same thing, Marathon is doing the exact same thing, a lot of stock-based compensation. Well, you've got to get that from the Bitcoin revenue. And they're not. They're printing shares, printing money, issuing shares to pay for all this. And I'm surprised that Bitcoin mining investors aren't fleeing in droves, and I think they will be. But this is what it comes down to. We've got Newmont and Barrick here. This is the cost, $1,900. And this is the price of gold. Nice profit. It's the exact opposite for a Riot and Marathon. And this is not even 60,000 anymore. This is a chart that's a week or so old. It's 54. And the total cost is 131. Now, we could bring that down if we get rid of some of that stock-based compensation. Maybe it's 120. It's still double what the Bitcoin price is. The market doesn't realize this. So this is to give you an idea how obnoxious the amount of energy and resources it takes to produce Bitcoin. Now, I know it does the same with gold. It takes a lot of energy and diesel and manpower and equipment and materials. Yes, it does. I agree. But at least you can melt down gold into something valuable. You can't do that with Bitcoin. Even though people believe it's a store of value, it's protection against debasement of the dollar. I get all that, but it's an electronic digital representation, and that only functions if the Bitcoin industry, mining industry, continues to work. But this is Riot's Corsicana facility. This is their newest picture and their August production update for their mining production. It's going to be 1,000 megawatts or 1 gigawatt. That's how much power. When they finish all the buildings here, it's going to consume 1 gigawatt of power. Now, this is Google Earth. This is Navarro County. You could see the outline here. You got Dallas and Fort Worth. So it's south, a little southeast of Dallas and Fort Worth. In the entire county of Navarro County, there's about 21,385 homes. And to power those homes, it would take between 14 and 21 megawatts of power. That's what it would take. Now you've got Riot Platforms, Corsicana facility. That's going to be 1,000 megawatts. That's the same power as 600,000 homes. And I think a lot of the people now are getting concerned about this. A lot of the local people, even the local politicians that thought this was such a good idea, they're starting to get worried. So I just talk about the fundamentals here. And this is something that isn't really understood by the industry. And so going forward, Bitcoin, the future of Bitcoin is on the next post-halving double. Basically, every Bitcoin investor is anticipating on the supposed guarantee that Bitcoin is going to have the next post-halving double. And if we go back to the 2016 halving, from July 2016 to February 2017, it doubled. And after the 2020 halving, which was in May 2020 to February 2020, it was up 4 times. Well, now we're getting the big move is supposed to happen from like October to February. That's when we could see here. You can start seeing in October, this is when the big move starts to happen. And even afterwards too. But this is when the big move, and so the anticipation is people are going into debt, like Michael Saylor and Marathon Digital, they just issued $250 million in new debt to buy 4,144 Bitcoin. So people are going into debt and companies are going into debt to buy Bitcoin because they're all banking on this doubling to occur by the next year. What if it doesn't? I don't know if it is, but what if it doesn't? And what's interesting? If we're going to compare the top 3 gold miners and the top 3 Bitcoin miners, and that's Barrick, Newmont, Agnico Eagle, and Marathon, Riot, and CleanSpark. In the second quarter of 2024, these 3 gold miners, this is in 1,000, it says K right there, they produced about 3.45 million ounces of gold, and they sold 3.35 million. They sold 97.2% of their production, and the gold price still went up. Now, this is what's interesting. The top 3 Bitcoin miners from June to August produced 4,319 Bitcoin. Do you know how many they sold? They sold 25. They didn't even sell many of them. So this is supply that's being held off the market. And why hasn't the Bitcoin price taken off? And then you got Michael Saylor buying Bitcoin, Marathon buying Bitcoin. You even have the ETFs. They've been adding Bitcoin, but not recently. They've been liquidating Bitcoin. With all this going on, why hasn't the price of Bitcoin started to take off? My fear or my concern is if we don't get the Bitcoin doubling in the next 6 months, what would happen? I think the Bitcoin miners may have to be forced to start selling some of their Bitcoin they're holding. ETFs would probably liquidate more. And then regular investors probably would say, this is, I'm going to get rid of some of my Bitcoin. It's not doubling. It could be, we could really see a real dumping of Bitcoin if we don't get that doubling. That's why the whole market is banking on it to happen. So I just showed you the difference between gold and Bitcoin is the fundamental value of gold is based on how it's produced, the profits that the gold miners are able to make to continue producing gold. And after it's produced, it sits there. You don't need any electricity to store or move gold, really. But Bitcoin, you need the Bitcoin mining industry to continue not only mining Bitcoin, but to be able to transact in Bitcoin. And unfortunately, right now, the Bitcoin mining industry is in serious trouble if there isn't a doubling in the price. So I just wanted to share what I see as the big difference, the fundamental difference between gold and Bitcoin. Thank you.